Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com on a Tuesday, election day. Hope everybody's doing well. So let's get right into it. We had a volatile day today, actually, right? Like right around 10:30 in the S&P. I don't know if you guys were watching the S&P. I'm sure some of you were. The S&P got hit. And that was actually due to cryptocurrency breaking below 18K. I don't know if you guys were watching today, the media and whatever. There are, there was a merger, big merger in the crypto space, liquidity issues and so forth. So what transpired is as soon as that came out, people I think panicked in the crypto market and they took crypto below 18K, and that's actually what prompted the big sell-off midday in the S&P. The S&P dropped like 60 points in about half an hour, and then recovered and just been all over the place. So all in all, again, just at the levels. We're kind of still, as been talking about, it's been rather frustrating unless you're a really short-term trader. Even today, we're still sitting above 3,800, but the next level really is going to be that 3,900 level is really going to be the key level. And at the end of the day, I would say today was volatile. Initially, we were doing pretty well on the S&P. We were rallying because the split government is probably likely to happen, where you've got a Dem president and all that, so the split government is always positive for stocks because they can't get anything done. So we like that gridlock. So I think that's already baked in the cake. I think that was part of the rally today. But again, until the CPI is going to be actually way more important, clearly, right? So that's coming on Thursday. So we'll see what happens. Just to sum up the S&P, there really isn't a whole lot to talk about. We had some big swings today, 30, 40 point swings. But if you look at your chart on a smaller time frame, it's kind of been just sawtooth going higher, just very, very choppy trading. Very, very challenging to trade in the short term. We just actually closed out our call position in the SPY. Okay. So we'll have to see how all that goes. We're going to reset that tomorrow, by the way, going into the CPI. The one challenge that we're having all across the board, and I'm sure you guys can attest to this, is whatever it is, if you're bullish or bearish, you're getting no follow through, right? So even if you're bearish, like even today, looked like the market was going to fall off the cliff, and then all of a sudden, rallies back up again. We're about 160 points off the low. So it's been, it's actually, I would say, generally speaking, it's been a frustrating environment across the board, really, for both bulls and bears. And I think the CPI number on Thursday will really either we're going to drop right back down to the lows, depending on how hot it is or whatever, or we're going to rally and break out above 3,900. So that's what I expect, and it's all going to be predicated on that. If the past is prologue in this year, it's probably going to be a hot number. What would really be interesting, by the way, for Thursday CPI number is if it's still a hot number and the market kind of shrugs it off, right? Hey, Gallo, how you doing? Right. So that would be really interesting, right? Because we've got other developments other than that. So all in all, even the NASDAQ also been kind of back and forth, big range in the NASDAQ. I would say 10,671 up to about 10,715 is the range in the NASDAQ. And we're, again, sitting in no man's land, lots of volatility, chopping in the middle here. Been rather challenging to trade. again, unless you're super, super nimble. I'm actually focused more on the dollar. So let's talk about the dollar real quick. I've been talking about the dollar possibly peaking. In fact, it did drop off. And what that did is it created some really nice pop in the metals. If you guys have been watching gold, silver, to some extent, copper, not as big a rally, but silver and gold really even today took off as well. And some of these currencies, I tweeted this earlier today about what I was writing about the currencies. All of them look like they're ready to break, right? They're ready to break out to the upside, and the dollar looks like it's ready to break down 109.27. Again, the only thing that would really change that dynamic is, again, a super hot inflation number on Thursday, and then we probably just rally right back up again, just like we did after the Powell press conference last week. Remember, it looked very similar. It looked like it was going down, and then that press conference where Powell just came out swinging, basically saying we're not done, we're nowhere near done, blah blah blah, and then the dollar just took off again. So still, again, just looking at the charts, we are right on the cusp of breaking down. If you look at your daily chart, you can see the 110 109.27. You can clearly see it's a rally based drop on your daily charts on the DXY. So we still have to get really just have to get break down hard below that 109, and even in the metals, I think are ready to break out too. So that's really what I'm focused on a lot right now, and the currencies and the metals here at TTS. So we'll see how that goes on Thursday. That's going to be really interesting. On the currency front, really, the yen looks. If you've been watching the yen, I've been talking about the 67, 65 level. Notice that it's kind of building a support area. If it breaks 70 on the yen, I think that can go for a really nice run. So that's just kind of giving you some ideas here of what I'm looking at, what we're going to be looking at on at TTS. It's still kind of just bouncing around, but the fact that it keeps holding at that 70, 67, 65 area, you can kind of see that. That's going to be really, really interesting. First things first, we got to get above 70, 0.0070 on the yen dollar, and then go from there. Okay, so those are the kind of things I'm really looking at right now. In regards to gold has to break above 1740. If you pull back the lens on gold and go to a daily chart, you can clearly see that we can deem that a massive range over the last 3-4 months, where gold swings broadly between 1620 and about 1740. That's still in place until we break above 1740. We've seen again if you remember, back in August, we had that massive rally in gold and failed, and so that's kind of where we're at. However, are there some huge opportunities in there to be trading? Yeah, these broad ranges do present some really nice opportunities for sure, right? So I would be looking at a pullback in gold, and on the distribution side, I'm not really seeing anything to get up to about the 1750 area in gold. Okay. In silver, similarly, still big broad range. We've had these big rallies in the past and they failed. So that's why we can't get super excited. I think silver, it's got to break 2250 before we can actually say that gold or silver is actually now maybe on a kind of a macro upside potential here, rather than just another big, because it could fail again, right? So those are the areas. Copper, interesting. I think I mentioned this on Tuesday. I'm sorry, last Friday. We had a really nice pop in In copper, also, I'm actually we're trying to get long some FCX and possibly some futures. One thing I would look at, similar to the rest of these metals, is the kind of 390. There's a big, massive weekly distribution where copper keeps stalling out. We got to get past that as well on copper, but it is a market that's perking up. Okay, so copper. Now in the bond market, nothing really happening in the bond market. We're in the 10-year particular, we're basically now in another range, about a 1 point range between 109.10 and 110.10 on the 10-year, which is really the main maturity I'm looking at, just relative, because that's really where the Fed looks at, and that tracks the terminal rate more or less as well. So again, CPI is likely to either break down, although the 2-year already broke down, but the 10-year is kind of just meandering here into a range. The big level on the upside, if the 10-year is actually going to put together any kind of rally, is going to be around the 111.28 area. Okay, so watch that level. But again, even bonds have been a challenge to trade. We're here at TTS. We're in a TLT straddle right now, expecting a big move in the bond market. Coming into the CPI number. Okay, so not a lot, really. There's not a lot going on that we didn't talk about on Friday, if you really think about it. I mean, the only thing that's happened is, the S&P did rally. The Dow is really the stronger of the equity, the indexes. And really, the reasoning is because it's only 30 stocks and it's pretty diverse, right? It's got, energy and insurance and Caterpillar and all kinds of stuff. So what's really still bogged down, as you know, are these big mega cap stocks. I mean, even Tesla got hit today. Tesla got hit. As you guys know, it's Amazon and Google. Meta did get a bounce yesterday, I believe, because they're going to do a massive layoff. They're going to do some massive cost cutting on the employment front on their personnel. So the question I've been getting lately is, can stocks rally? In other words, can we? And you can see that, by the way, you can see that in the NQQ, in the QQQQs. They've clearly been the laggard. The Dow has been the leader. Also, Russell's still fairly strong. But all in all, as if you guys, you can vouch for this, we just can't get any kind of traction in either direction, really sustainable in the equity, in the equity products, especially in the Nasdaq and the S&P. Okay, and that is frustrating. It's if you are even if you're a bear, right? Even the bears are getting frustrated. Because you keep trying to short it, and even today, I mean, like I mentioned this morning, it looked like it was going to fall off the cliff, and then sure enough, it comes right back down again, right back up again. So it is a very I would say on the index front, I would call this a fairly challenging environment, just because we just can't get any kind of traction in either direction. Will that change? Will the seasonals really take hold after the CPI? Yeah, we'll see. I mean, if we get a cooler number and just, the market's, all it's looking for is just a trend, kind of a step down in the CPI. Clearly, we're not going to go from, 8 to 6 or any time soon. But that's really what the market needs in order for it to really gain some traction here. And if we don't get that, I think we're just going to be chopping around in here. back and forth, back and forth. And then next year is going to be tougher, I believe, because next year I think the economy is going to go into recession and so forth. So I think it's still tough sledding. Now, the good news is, and I've been talking about this for some of you guys that outside of just futures, I'm going to do a class on options on Tuesday evening. I'm going to try an evening class. If you guys are interested, sign up below for you guys that want to do options related to stocks and so forth. So if you think about it, are there sectors, again, underneath the surface in the stock market that are working? Absolutely. Again, I talked about this on Friday, so I want to mention that it's not it's not just everything's just going down now. What's still under pressure, what's still under tremendous pressure, are the high growth, non-profitable companies. I mean, you saw Zillow got just annihilated the other day. So these crypto, anything that doesn't really anything high growth, meaning in technology and whatever, is still, you want to stay away from that, right? Now, on the same token, I've been talking about TSM, ADM. So I focus on best of breed companies that are profitable. If you've been watching TSM, that's actually been doing pretty well. But here's my point: energy still doing great. Banks, JPM gone from 100 to 132. There are pockets of strength in the market, and that's on the options. If you're interested in learning about options and getting involved in some of that, you don't have to have a big account, by the way, right? With options, that's the beauty of the options market. And you can get involved with some of this other stuff if you're somewhat challenged right now with the futures markets, which I know a lot of people are right now. It's somewhat frustrating, and unless you're super nimble, you're not getting a ton of movement. And then I believe actually TradeStation actually restricting their margin today. I think they pulled back their margin, right? So there's a lot of stuff going on. Okay. All right. Sorry about that. Now, one last thing. So tomorrow we have a grain report. So you guys know I love to trade the grain markets. That's coming out at noon Eastern. And just in wheat, I've talked about, wheat has been all over the place. It has some massive support around 826. And if it drops really hard, I'm not looking to get involved long in wheat until we get the first really quality area in wheat's all the way down into the high sevens, right? That's really and then clearly there was a big drop, there was a huge gap the week before, and then gave it all back because I guess Ukraine is actually exporting a lot more than people thought. So we had that big drop in wheat from like $9 all the way down to 850. So that's a market I'm still kind of focused on. Soybeans as well. Soybeans are Jan soybeans have some nice levels in the around the $14 area as well, coming into the grain report tomorrow. And then corn looks like it's breaking down. I think if it breaks 660 on corn, there's some levels below that look really nice as well that I've been focused on. We've been kind of really patient on those markets, but a lot of this stuff is starting to really get some movement, like we talked about the metals, silver, gold, copper. What we do here at TTS is we focus on the markets that are moving. Energy still moving. Nat gas, right? Nat gas, huge movement. We're still trying to get long nat gas. We didn't, it basically came up to that resistance at 725. Had gapped up Sunday it gapped up, and now it's given it all the way back. So we'll see what's going on with that. But those are the markets you want to focus on right now. And if you're not psychologically made up to trade because nat gas is huge market, right? I mean, that thing's swinging even today. I mean, that thing's swinging like $5,000-6,000 a day on the standard contract, right? The 10,000 MBTU contract, things swinging, $5, 6, 7,000 a day, as if you know that market. So what I'm doing again is, in order to participate in those type of moves, you got to be flexible enough. We're buying UNG, which is a little, that thing swung from, we bought it at initially at 17.83. We wrote it up to 20, went up to 22. It's all the way back down again. So there's some huge volatility, little $17 number swinging about $4 or $5. That thing swings about $2 a day. So that's pretty good, even if you're doing a couple hundred shares on that. So those are the kind of stuff that you want to take advantage of. But you got to be, obviously you got to be equipped to understand those kind of markets. Okay. And then oil, I think I just talked about that. Oil, there was somebody in here asking me about oil. So we broke 90 and then went up to 95. There's a pivot, kind of a turning point at 90, 95. We're trying to head right back down again. And very similarly, this market is just big ranges. You can't, one of the things I caution everybody: do not chase these markets. Don't chase them up. And I think a lot of people are getting messed up with that, right? Because again, they're chasing the up moves. And then, when the market's, like oil, if you did that with oil in the last several months, you chase that move down, you basically, we had that massive drop from, like 97 down to 76. We actually caught that low. And then we had that massive rally, obviously in the middle part of this move, when it started going, you would have made some nice money buying the pullbacks. But again, if you got in too late, right around 93, came all the way back down 83, back up to 95, and it looks like it's heading right back down again. So you got to be very careful not to chase these moves. Deep pullbacks is what's working right now, because a lot of these markets just are not getting any kind of big follow through, as we know. So be careful chasing the moves. Buy low, sell high. As you know, that's my mantra. That's always, at the end of the day, that's always what keeps you in check, and avoids, prevents you from, again, just getting too beat up in chasing these markets. Make sense, everybody? But that's very tricky, and psychologically it's counterintuitive, because when you see a market moving up, your inclination is to chase. USDA.gov, Ryan. Yep, USDA.gov. Okay. Yeah, that's the United States Department of Agriculture. Okay. Let's see. I think I covered everything. So I'm going to get out of here early. There's, again, I can sit here and blah, blah, blah about all kind of stuff that doesn't make it, So here's, let's wrap up. Just again, the salient points. Where do you want to get involved? Again, stay away from markets that are choppy and not really having any kind of follow through, i.e. some of the indexes. Now that will change on Thursday, I believe, right? We're probably going to get an outsized move, because again, and possibly even tonight, I don't know, who knows? Disney just reported positive earnings, so that could move stocks a little bit. So again, we've got grain report tomorrow. We've got the typical, oil tomorrow. Also, by the way, the oil inventories, nat gas on Thursday, and then the big one, CPI on Thursday. That's going to be the big one. and we are, I'm going to be setting up some volatility playing the S&P going into that. I'll set that up tomorrow for my members. So we did get out of our calls this afternoon, just because they expire tomorrow, and then we'll reset those again. The lack of follow through is also, we've actually been doing a good job of just, basically breaking even a lot of these volatility plays. We try them, again, this morning, it looked like we were off to the races, and yep. Was that what it is, Disney? Okay. I'm not watching it right now. So, well, it's probably a good thing we got out of our calls then, right, Gallo? we got out of our S&P calls right on the close. So, but we'll take a fresh look tomorrow, and then obviously the election results are going to probably. I think, again, I think it's already kind of baked in, the cake. I think it's almost like a foregone conclusion. So we'll see. All right. So one last thing, again, if you guys are want to take a spin with me, 5 days free, and we have a class coming up on Tuesday. I'm going to do an evening class. That'd be 3 Pacific. So for you guys in the East, that would be 6. I'm going to try a little evening class. Maybe, some of you guys at work or whatever can sign up for that. That's on the below, and then the newsletter and all that stuff. So, okay. All right, everybody, be careful out there. Again, be patient, because again, these markets are, as you can see, even today, I mean, they're all over the place. And I think CPI is going to get us out of here. Either we're going to crash down and make a new low on the NASDAQ, or we're going to continue the holiday. Maybe the Santa Claus rally kicks off. Who knows, right? All right, everybody, have a great rest of your week, and I'll talk to you on Friday. Take care.